Hello, good morning, sir.
Good morning. Where is Felix? Sir has joined. Felix has not joined. Good morning, sir.
गुड मॉर्निंग सर.
एक 2 मिनिटात सुरू करूया.
हाँ हाँ, नो प्रॉब्लेम.
Sir, good morning.
गुड मॉर्निंग मॅम.
Myself, Riya Dhamapurkar.
गुड मॉर्निंग.
सर व्यवस्थित आहे, काय चेंज करायचं आहे?
हेलो, इट्स ओके सर.
Okay. Just 1 minute.
सर, मेक मी co-host सर.
Sunil sir, with your permission, we can start the session.
Yes, sir.
Okay, thank you, sir. Namaskar, everyone. Yet we are here with another important knowledge series. This effort is started by Department of Accountancy, Mulund College of Commerce, so that we can use this interesting hybrid mode. During COVID, we realized the power of online medium. Naturally, now that things have resumed to normal, we are back to classrooms. But then we have now discovered this important medium where we can connect with some of the eminent scholars of our field, and you will also get to interact with different teachers, professors. Now this will also help you to give different way of learning, to understand different experiences. So I think this is an important opportunity for all of you to understand an important concept from the point of view and from the wisdom of eminent personality like Dr. Sunil Kadam sir. I request Ria madam to introduce him formally.
Yes, sir. Good morning, everyone. It is a
Good
great
morning, madam.
it is a great pleasure to introduce Sunil sir, a very multifaceted personality. Uh, Captain Dr. Sunil Kadam is a commissioned officer of NCC as well as vice principal and head of Department of Accountancy at NG Acharya and DK Marathe College from Chembur, Mumbai. He is a postgraduate recognized teacher of University of Mumbai in the subject of accountancy and also a PhD research guide at University of Mumbai in the subject of commerce and management and accountancy at Acharya and Marathi College Research Center, where 4 students are pursuing PhD under his guidance. He is a member uh, of Board of Studies in Accountancy of University of Mumbai at Jai Hind College, Joshi Bedekar College, VES College, and Sathi College, which has an autonomous status. Uh, with 27 years of teaching experience and having 13 years experience as commissioned associate NCC officer at Vijay TI, he also has 3 years experience as NSS program officer. Not only that, he has worked as a course study material writer for Idol University of Mumbai for TYBCom costing paper, and he has co-authored 4 textbooks for Shade Publishers, 2 of which are for SYBCom in the subject of accountancy for semester 3 and 4, and 2 for SYBA in subject of bookkeeping and accountancy for semester 3 and 4. He has been one of the resource persons for 3 national seminars organized by various colleges. He has completed 2 minor research projects funded by University of Mumbai, and he has presented 23 papers in national and international level seminars and conferences and published 17 research articles in international peer-reviewed UGC CARE journals. He is a recipient of 2 outstanding research paper awards in international conferences organized by University of Mumbai as well as Seva Sanskar Puraskar 2019-21 from Janvi's Multi Foundation Mumbai for his social work during COVID pandemic. Uh, it gives us great pleasure, sir. We have you today here for our students. They will be listening to you for your session. Thank you so much.
Thank you, ma'am. Thank you for kind introduction.
Over to you, Kadam sir.
Oh, thank you, sir. At the outset, let me take this opportunity to thank the governing council member of Mulund College of Commerce, Principal Dr. Sonali Pendnikar Madam, Head of the Department of Accountancy, Dr. Nikhil Karkhanis sir, the faculty of Mulund College of Commerce, Pixel Anthony, and Ria Madam, and dear students, good morning to one and all. So I take this opportunity to thank for inviting me to interact with the students, as well as to share what I have learned with the past experience having lecturer as a accountancy. So to start with it, let me share my screen. So I have to start with the cash flow statement. A cash flow statement, we may come across the question why it is needed now. The new Company Act 2013 has given made it mandatory, or even it was mandatory for companies uh, to support their financial statements with the cash flow statements. Uh, why it is needed? That question comes in our mind. Uh, why the burdens are increased for the accountant to prepare a cash flow statement along with the financial statement? It has it underlines the need why one should present the cash flow statement along with the financial statement. Is there is some limitations of the financial statement what we earlier or we used to uh, publish as the income statement and the position statement. So it's a balance sheet. And the balance sheet has some limitations. So it gives a position on a particular date. So if we have that N format balance sheet, which gives the last year and current year position on a particular date, that's generally 31st March. So we have a cash balance or cash and cash equivalent balance on the opening dates and closing date, but it never describes what happens between these two dates, 1st April and 31st March. How the cash flown in and flowed out, how it is, to what way it is received, what way it went off. There's a possibility the term called a window dressing might have taken place. The stakeholders who are going to invest in those companies may misguided because of some window dressing. To avoid that, or to ensure the interest of the stakeholders, it is made mandatory to present or to submit or to disclose the cash flow statements, which gives an idea how the funds are flowed in and flowed out, so that there's the possibility of misappropriations of funds is reduced, or the investors may feel comfortable before taking their decisions. Henceforth, it is mandatory to prepare cash flow statement as a part of your financial statement for the companies. So it's when if you want to go prepare the cash flow statement, we should be in a position to prepare it. And for preparing purpose, we have to understand what it is. And let us understand what is the cash flow statements and all. So first job is to understand what is mean by cash and cash equivalents, because the Schedule 3 of Company Act has given the format for a balance sheet in which categorize the assets and liabilities broadly into two categories, that is a non-current and current. And current has one major current asset is cash and cash equivalent. which consists of cash in hand and cash at bank. And cash equivalent consists of those current assets which highly liquid type of assets which can be converted in a cash as and when needed. It's an immediate effect. So even the foreign currency also consists of the cash and cash equivalent. So our job is to understand what we consider in cash and cash equivalents. That first is cash in hand and cash at bank, and even those deposits which are those investment which will be converted in a cash as and when it is needed, along with some other example. We can take it as a foreign currency transactions, also a part of in cash and cash equivalents. So how these cash, the cash comes in and cash goes out, is to be prepared in a statement. That's what it's called as a cash flow statement, a statement which gives the summary, the movement of a cash, either it is inflow or outflow in a one particular statement. So to understand that, let us go back a little bit early, the basics, that is the accounting are carried out in two methods. We would say that the accounting methods, one is a cash method and another is accrual method. What is the difference between these two, cash method of accounting and accrual method of accounting? Let us understand a little bit. So, under the cash method, the revenues are recognized as and when it is received, and the expenses also recognized as and when it is paid. But the accrual method of accounting has a little bit different. It recognizes the revenue as and when it is earned. It doesn't matter if it is received or not, but it is earned. It has to be considered as a revenue generated. Whereas the expenses also recognized as and when it is paid. No, it is incurred. Paid is in the cash method. But when it is incurred, though it is paid or not paid, it is to be recognized under the accrual method. Now, in a short, what we can say, the cash flow statement is a method, a cash method of accounting, where it gives the summary when the cash has come, what source it was, and where it was used. So, in a short, we can say, but to comply with the several accounting concepts, conventions, policies, and principles, it is mandatory for all organizations now to follow or to adopt the accrual method of accounting for their records. And therefore, the merely cash method, if it is accepted, then the cash flow statement is not needed. But when the companies or the organization or the entities are accepting or preparing their records with the accrual methods, then they have to prepare a the financial statement along with the cash flow statement. So let us move further and understand. If you want to understand what is a cash flow statement and how the cash moves in, I would say we should understand first what is a business administration or management of a business. So that could help us to understand the cash flow statement very easily. So if a person wants to do some business or wants to become a manager and wants to control the business, or any layman can say, I want to do business. Or take another example, in the current era, the government has encouraged for startups. Lots of people are interested, looking at the other person. He has done the successful startup and earned huge amount of money. And looking at that, several people says, okay, even I can go for a startup and earn money. Or even people say, why do we become the employment provider rather than employment seeker? With these objectives, people now these days are planning to do some sort of business. If you want to do the business, the startups which already the government has encouraged, and it is widely accepted by the people also. And lots of startups have taken place, but the startups haven't reached to the success. It's not reached to the peak, or several have started, several have reached, but maximum not able to uh, reach their goals because of improper planning. Merely saying that I want to do the business and tomorrow I start a business, will it be successful? It can, but it dead sure we can't say that. If I have put in efforts before starting the business on the planning, what I supposed to do for becoming a successful businessman. I may go for such a business where the trading may be there, or I may go for a manufacturing of concern, or I may think about providing services. So let us take example of a traders. If I want to become a traders, what I supposed to do? I have to purchase the goods, and that goods I have to sell it. I have to sell it. So purchasing and or buying and selling the goods and services are the trade. So if I want to become a good trader, I have to purchase the goods and sell it with some additional margin, so that it's my profit. But these purchase and sales, I have to decide what goods I supposed to be, what businesses will survive in the market. Otherwise, I may merely blindly start a business and it will end up with the unsuccessful business. Henceforth, the planning is important. I have to take a decision. I have to study the market, which business may survive or may give me returns properly. And this what purchase and sales is called as operational activity. What is my aim or goal of doing the business is what operational activity. For doing this purchase and sale, I need some sort of investment. For example, if I want to do the purchase and sale of a cloth, I need a cloth store at appropriate place. And for that purpose, I have to do some investment in the assets. So for that purpose, I required some building. I required, if it is a production machinery, I required furniture to do this buying and selling. And for that purpose, I need to do these activity called as investment. I need to invest for doing the purchase and sale. Invest in what? The building, machinery, and furniture. So for doing this investment, I need a fund. Otherwise, the execution of my main operational activity is not possible. Henceforth, I have to do one more activity, that I have to generate the capital, or get a capital and generate the funds in the form of loan. Either it is outside a loan or secured, unsecured, whatsoever. So for that purpose, I will be involving another activity that called as a financing activity. For a successful business, you have to plan from this operational activity. You have to think first. And for that purpose, the required assets needed to purchase. And for that purpose, you have to, accordingly, how much assets are needed, accordingly, you have to generate your funds. That's a financing activity. So what I wanted to tell here, first you plan what you want to purchase and sell or do the business. And for that purpose, how much assets are needed. That's the second. So planning has to be in this way, but execution will be in reverse manner. Execution in this manner. You have to collect the money, from that invest in asset, and then go for a business. This is what a business administration is, which broadly allocated in three activity. The first one is operational activity, and for that purpose we need to invest into the assets, and the assets for investment purpose we need funds, and that is funds raising activity called as a financial activity. So Now let's see the purchases is considered as expenditure. Now I'm going to elaborate a little bit about how these activities evaluated from the financial statements. So purchases would be considered as a expenses, sale, and that will transfer where the expenses will charge to trading profit and loss account debit side, and the sales are income that will charge to trading account and profit and loss, trading profit and loss account credit side. Both of this is called as profit and loss account or income statements. So if anyone wants to evaluate the operational activity of any organization, you can say you have to evaluate the profit and loss account, the trading profit and loss account or income statement. So you will easily evaluate or analyze that organization's operational activity. On the other hand, investment activity, building, machinery, and furniture are the assets. And the assets we charge to balance sheet asset side. And the financing activity where the capitals are generated considered as a liability, which charge to the balance sheet liability side. And both assets and liability is a part of balance sheet, which is a position statements. If you want to evaluate any organization's investment activity, now you can, you learn that where you have to look. You have to look into the balance sheet asset side for investment activity. And for financing activity, if you want to know what the financial activities of that organization, look at the balance sheet liability side where you will get this. So in a short, one can analyze any organizations, all these three activities by reading financial statements. Now let's come back to the cash flow statement. Why it is needed? Because these three activities itself give us an idea how the funds are flown in and flown out. So let us see the cash flow statement. This operational activity we have considered example of a trade. There is a purchase, which will be when you purchase, you need to pay the money. When you pay money, it's a cash flows out, cash goes out. Henceforth, it is outflow of cash, which will be recorded where, if you want to find out a cash flow from operational activity, you have to look at the trading profit and loss account debit side for outflow. There are several examples. We are going to consider those. We will discuss those in coming slides. But profit and loss account, whatever expenses are shown, that's outflow of cash. And for a sales, that's another activity of operational selling, which obviously gives the cash comes in. That is inflow of cash, where we will analyze it, trading profit and loss account, credit side. And this is what an inflow and outflow from operational activity. For operational activity, inflow and outflow, we can evaluate from profit and loss account. Second activity we learned, investment activity, buying the assets, building machinery, that to buy that, it goes cash outflow. But if you sell that, cash inflow it. Balance sheet assets are. Financing activity, when you generate the finance, capital or loan taken, cash inflow, balance sheet liability side. For both of these, if you want to evaluate, there's a possibility refund of loan, that is a cash outflow, refund of loan or repayment of the redemption of shares, also cash outflow. The same case here, investment activity, when you purchase a building, so a possibility sometimes you may sell the some of these assets that inflow the cash. So now we understood why it was needed to understand the business divided into three major activities, that is operational, investing, and financing activity, which gives us an idea where from the cash came in and where it has gone out, inflow and outflow of cash. So let's understand exactly the statement what we need to present as a part of our financial statement is a cash flow statement. As I said, it gives a summary of the movements of a cash and cash equivalents, the cash receipts and cash payments. So for that, just now we had discussed, it becomes a cash together, but it has flow in two directions, inward and outward. So let us understand first the inward inflow from the operational activity. Examples are already given: investment activity and operational activity, sale of asset, commission received, discount received. These are the inflow from operational activity. Investment activity inflow can be sale of asset, plant and machinery, building, furniture sold out, inflow from investment activity. And financing activity inflow when you take a loan from a bank, either it is secured or unsecured, it is inflow of a cash which flows in. On the other hand, when it is outflow for an operational activity, we have taken example of several expenditure incurred, or you purchase the goods, cash you have to pay for that purpose, it's outflow. For investment, you purchase the assets, cash goes out, as well as when you refund the loan or repayment of the capital, also outflow. So in a short, we have to give the summary from by considering these major three activities, where from the funds flown in and where it's flown out, inflow and outflow of cash. It's a statement. Use the summary of inflow and outflow of these three activities. So for preparing that now, let's discuss a little bit about the company's point of view, the inflow and outflow of cash flow from operational activity. As I already told, the cash as per the AS3, I haven't, now we are going to discuss it for a company's purpose, and accounting standard 3 issued by Institute of Chartered Accountants gives us the idea how to prepare the cash flow statement, and it was revised in 1997 onwards. It is revised AS3, and in that they had guided which should be a part of cash and cash equivalents, and what should be considered in operational activity, what items not to be considered in investment activity and financing activity. So let us understand the cash flow from operational activity. The as per AS3 revised, cash received from on a sale of goods and rendering services, which we have already discussed, cash received from royalties, fees, commissions and other revenues, cash paid for employees, for on behalf of employees, or cash paid to the suppliers also included in the cash from operation inflow or outflow. But cash paid as an income tax and refund, that is a refund from the income tax, also a part of operational activity. But for finding of cash from operational activity, there are two methods, one called as a direct method and another indirect method. Whereas the direct method, under which we will be taking accrual method of not accrual, the cash method of accounting, where the cash received and cash paid, in which from the operational activity we will work out all the purchases where the cash flown out, and the sales or any expenditures where the cash flown out, and the sales where the cash comes in, or other incomes generated by that organization is cash inflow, is equals to the direct calculation of a cash inflow or outflow, or cash used or generated from operational activity. But as far as exam point of concern, the maximum questions are asked on indirect method, where we will reach on the top and then we'll come back to the foundation, or the reverse method, where from the net profit we will be adding and subtracting such items so that we will get the gross inflow or outflow, or net inflow or outflow from operational activity. See the slide where it indicates the revenues are earned, it's income, and expenditures are also incurred on accrual basis, which consists of some income and expenditure which is incurred or due but not received, or due but not paid. Such non-cash items has to be treated before reaching to cash from operational activity. Therefore, we have to eliminate some non-cash revenues and expenses so that we can reach to the operator. So we will elaborate, we will discuss in detail in the format, which is we will discuss for calculation of actual cash from operational activity, investment activity, and financing activity on the next slides. But time being, just remember indirect method where we have to take the net profit and eliminate all those non-cash and non-operational incomes and expenses, and the change in the working capital also required to consider before reaching the cash flow from net cash flow from operational activity. So let's try to understand how to work out the cash flow from investment activity. What are the items as per AS3 revised is to be considered as a cash flow from investment activities? Cash paid for purchasing the tangible or intangible assets, cash received from sale of fixed assets, either it is tangible or intangible, both are to be considered. Cash paid for acquiring shares, warrants, or debt instruments. Even joint ventures also a part of investment activity. Cash received from disposal of it or issue of shares, warrants, instruments, etc. Cash given as an advance and loans are given, also a part of investment activity. So this is what AS3 says, revised. And for financing activity, AS3 says cash received from issue of share capital, cash received from debentures, long-term and short-term loans, repayment of amount borrowed by that organization, and payment of dividend. Either it is the interim dividend paid by that organization, also a part of your financing activity. If you want to prepare a the cash flow statements, this is what a format as per revised AS3. The cash flow statement we have to prepare for a particular period of a particular company. Generally, it is 1 year in. For preparing this, we have to compare two balance sheets, wherein the first activity will be evaluated first, that is a cash from operational activity, and where we will take first the profit for a current year. And for finding out a profit for current year, we can compare the profit balance given in a balance sheet, previous year and current year. So we will write there as a closing balance less opening balance, will get the net profit. And to arrive as the actual current year's profit, whatever allocation has been taken care of, it has to be added back to reach to the current year cash profit. So transfer to reserve, proposed dividend for current year, interim dividend, provision for tax, all these outflows has to be added back to the to arrive as a cash profit for a current year. And from that we will adjust non-cash and non-operational expenses or items, such as the depreciation for a fixed asset, amortizations on intangible assets, other non-current assets written off, interest on long-term borrowings, loss on sale of any other assets, non-current assets. That's the item which is non-operating items and which is already taken care and at the time of calculating net profit. Therefore, it will be added back. And we will subtract if any interest received, rent received, other non-operating incomes received, and the profit or loss, profit on sale of fixed asset before arriving the operating profit before working capital changes. And in that, we will add a decrease in current asset, increase in current asset, and we deduct increase in current asset and decrease in current liability. So decrease in current asset, decrease in current liability will be added and deducted. Increase in current liability will be added and increase in current assets will be deducted from the capital, working capital, uh, operating profit before working capital. Then we'll reach to the cash generated from the operation, and from which we'll deduct the income tax paid during the year. So we will get the net cash used or generated from operational activity. This would be the answer. Then the second activity is investment activity will be evaluated by proceeds from the sale of tangible assets, intangible assets, proceeds from the sale of non-current investments, interest or dividend or rent received during that particular period will be added and subtracted. The purchase of tangible asset, intangible assets, purchase of non-current investments, and any cash used for investment activity. After adding and deducting this, we will reach the cash flow, net inflow or outflow from the investment activity will be calculated. Third activity is the investment activity, which will be evaluated by adding proceeds from the issue of shares and preference shares, cash received from the sale of debentures and long-term borrowings will be listed, from which we'll deduct the dividend paid, interim dividend, final dividend, and any interest paid on these borrowings, and repayment of loan and redemption of shares and debentures would be cash flow now, and we will get the balance, the net cash, either inflow or outflow from, that is, we can say cash used or generated from financial activity. So first, cash from operational activity plus cash from investment activity plus cash from financing activity, we will reach to the net increase or decrease in the cash. You will get either plus or minus balance that indicates that either increase or decrease, from which we will add the opening cash balance. So the closing cash balance would be the cash generated plus opening balance, or used plus opening balance would be the closing cash balance, has to agree with it. If it is not agreeing, it seems that might be some miscalculations, or some funds might not be considered at the time of preparing cash flow statements. So now you understood the cash flow statement is prepared by taking those business activities in a different way of funds flows in, flows out. And we have to present our cash flow statement along with the financial statement. So to make it very clear cut, let's take one example which could make the idea of cash flow and inflow very clear. So for that purpose, if we want to solve the sum, our first task is to understand the question clearly. So this question, which we are going to solve very quickly, the Telestar Limited gives the following balance sheet for the year end date 31st March 22 and 31st March 23. Prepare a cash flow statement for the year end date 31st March 2023 as per AS3 by indirect method. Generally, the questions which asked in examinations are based on indirect method, where the cash from operational activity is worked out by using indirect method from net profit to the gross cash generated from operational activity we have to work. Let us see how to calculate that. That provided us with the equity, two balance sheets, balance sheet of previous year and current year, equity share capital, preference share capital, general reserve, profit and loss account, provision for tax, and creditors. These are the liabilities, and assets are land and building, stock, debtors, prepaid expenses, bank balance, and miscellaneous expenditure. The balance sheet, previous year balance sheet total 6,10,000, 6,10,160, and 6,40,400 of the current year's balance sheet total. And they further told us the further information is other information that for year ended is 31st March 23 is the company has paid interim dividend 5% on equity shares. Preference shares were redeemed during the year at 10% premium, and the income tax paid during the year is 1,500. For this Telestar Limited, we are going to present the cash flow statement, which has to which is as per the AS3 revised. We will be presenting. Just now we have learned the format where we will be preparing our cash flow statement in this manner. So this is our question, and we are going to present prepare a cash flow statement. So let's prepare. First, we will say the company's name was Telestar. In the books of Telestar Company, we are preparing cash flow statement for the year ended 31st March 2023. And the cash flow statements, we prepared particulars entry amount column for finding out the cash from operational activity, investment activity, and financing activity. So let's prepare. So check out the question. For we have already discussed the how to analyze the balance sheet and where from you will get the funds inflow or outflow from investment activity and financing activity. For operational activity, we need to evaluate profit and loss account. For financing activity, we have to evaluate balance sheet asset side. For financing activity, we have to evaluate balance sheet liability side. So let us evaluate equity share capital. The first item is equity share capital, where it was 1,20,000, 1,20,000 unchanged, but the preference share capital was 90,000. Now it becomes 60,000. It seems that there is a repayment as per the adjustment number 2. Preference shares were redeemed during the year 10% with a premium of 10%. So that 30,000 difference with the 10% means 3,000 premium also refunded. We'll ensure we will record these outflows in financing activity. But prior to that, the first activity which we will be evaluating is the operational activity. So let us go to the flow statement. We will write there as cash flow from operational activity. And for that purpose, we will first work out the net profit for the current year. And in a question, it's not given directly, but we can derive it by looking at the profit and loss account balance. The profit and loss account for last year was 15,240. Now it reached to 28,080. The difference between these two balances is the net profit earned during that particular period, that is 31st March 2023. So let us record there in the cash flow statement. Closing capital balance, closing profit and loss account balance was 28,080 minus opening capital balance. How much is opening? Let's check out in the question. Opening is 15,214. Let's record 15,214. So when we deduct this, the answer is 12,840 is the net profit for the current year. So profit we got, and in a format we understood that when you got a profit, then you have to adjust non-cash and non-operating items. And for that purpose, let us find out what are the non-cash and non-operating items given in a question. So we have a provision for tax. That's the current year provision and last year provision. There is information given that income tax paid during the year is 15,000. So current year tax provision we can work out by preparing working note. So there is a general reserve 30,000 and it is increased. These are the allocation of a profit, transfer from the profit to the general reserve is some amount 30,000 plus, sorry, minus or 42,330 minus 30,000, that is 12,330, which is a part of non-cash and non-operating items. So let's record adjustment for non-cash and non-operating item. It's a transfer to general reserve, that is 42,330 minus 30,000 is 12,330. That's what they. Let's find out what other another non-cash items we have. It's there is profit and loss account, provision for tax, general reserve is over, profit and loss account already taken care of, provision for tax. But prior to that, there is a information, we will work out a provision for tax account separately, but there's information in the additional information that there is an interim dividend paid. The company has paid interim dividend 5% on equity shares. So equity shares 1,20,000, 5%, it comes, the answer comes around 6,000. So 6,000 is interim dividend paid, which is non-operational activity. So let's record that. Non-operational activities, interim dividend paid, that was 1,20,000, 5% is 6,000. That is interim dividend paid is a non-cash item. Let us find out what are other non-cash and non-operational activities by looking at the two balance sheet. There is a one item called a provision for tax. So we will prepare a separate account. Let's prepare separate account for as a part of working note. That's a provision for tax account, ledger. So we have two balances. Let's see in a question. Balances provision for tax. Last year provision 17,000 and current year provision is 8,000. So last year provision, it's a liability, always has a opening balance, credit balance, by balance brought down, that is opening balance provision amount. I forgot what is the last year, 17,000. Let's record 17,000. And the closing balance is also available. What is the closing balance? In a question, closing balance is 8,000. That's a closing balance. Liability always has two balance carried down. That's a closing balance by balance carried down, 8,000. And in a question, additional information says that income tax paid during the year 15,000. That 15,000 is cash flown out, cash gone out. So it is paid. That account will be debited 15,000 to bank, 15,000. Now our job is to close this account. The balancing figure would be the provision for current year. So let's get a total. The total 15 plus 8 is 13,000, 23,000. 15 plus 8 is 23,000. Right to the credit side. The balancing figure is the current year's provision, which is charged in a profit and loss, and the balancing figure is 6,000. So this 6,000, which we have to record in our cash flow statement from operational activity. Provision for tax, as per the working note 1, we got the answer 6,000. So let's further check out the question and find out, is there any further item? See, provision creditors, that's change in working capital we'll consider, not here. Land and building, it was opening balance 2,10,000, 2,17,000. There's a possibility one can assume it as a sale of investment, or one can assume it as a depreciation of in charge. Now it depends upon the quantum of amount which is differentiated. But sometimes it will be clearly instructed to you in the additional information, or sometimes it is up to you. You have to assume it. For this case, land and building, last year it was 2,10,000. Now it is 2,70,000. It means the purchases, 2,10,000. Now it is 2,60,000 purchases. For a building, it is 2,85,000. Now it becomes 2,70,000. Here, for land is purchased, but building, you can either consider it as a sold out or it might be depreciated. But here, the amount is 2,85,000 becomes 2,70,000. It seems that building is depreciated. So that is a non-cash item, but from a land, there is a sale inflow will record in a investment activity. But for a building, there is a depreciation charge 85 minus 70, that is 15,000 depreciation have been charged. So let's record in the cash for non-cash items are depreciation on a building 15,000. Now let's further check out what's item there. Stock change in working capital. We will consider debtors also change work part of non-current asset working capital. Prepaid expenses also working capital. Cash and bank balance that we have to reach. That was the last year balance, current year balance. Miscellaneous expenses. The miscellaneous expenses last year it was 6,000. Now it is reached to 5,400. It seems that the amortization is carried out, or the 6,000 minus 5,400, there is a 600, it is written off. Therefore, it is a non-cash item. We will record in the cash profit purpose. So, miscellaneous expenses written off. How much it was? Let's see. 6,000, 5,400 means 600 difference, which will be recorded. Here, 600. So 600 is recorded, and there's one more item. See the question. There's one more item. They said preference shares were redeemed during the year at a premium of 10%. So let's see the preference share capital. 90,000 becomes 60. It means 30,000 was refunded, repaid. But at the time of repaying it, redeeming the preference shares, they have redeemed with premium of 10%. So 30,000, 10% premium is 3,000, which also a non-operational activity, which is debited. Therefore, it has to be recorded in the operational activity. That's premium on redemption of preference shares is 3,000. So all these total of these non-cash and non-operational items will take into the outer column. That's a total 42,930 is a non-cash and non-operational items, which will be from operational activity. We will total it will be called as the adjusted working capital before change in working capital. So operating profit before working capital changes. For that purpose, we will be comparing current assets and current liability. So let's look at in a question, current assets and current liability. Let's check out what are their current assets. We have a stock, debtors, prepaid expenses. Stock, it was 27,000, now become 36,300. There is an increase. Debtors, there is a debtors 40,440, which is now reached to 38, means decreased. And prepaid expenses 25,880, which will become 17,000, also decreased. It seems that stock is increased and debtors and prepaid expenses are decreased. So let us record stock increase. Increase in current asset is minus. So let's record that the total before 12,840 plus 42 is 55,770 is the operating profit before working capital changes. We will be taking first as increase in stock. How much it was increased? Let's record first. Increase the adjustment of change in working capital. Increase in stock. How much increase? Let's find out. 20 stock 27, 36. It seems that 9,300. 9,300. Let's record it that 9,300, which will be deducted. Then debtors are increased. How much debtors are increased? Increased debtors are 40,440, and now it reached to 38,460. It seems that 1,980. 1,980. Yes, 1,980. Will record there. What it is? Decrease in debtors 1,980. Another asset, current asset, that Prepaid expenses also decreased. How much? 25,880. 25,880 minus 17,000. It comes 8,880 minus. So it is reduced. So let's record decrease in prepaid expenses 8,880. We have taken care of all assets. Now let's find out what is there any liability, current liability. That's a creditors. 3,37,920, 3,81,990. There is an increase in creditors, also minus. How much is the difference? It's 3,37,920 minus 3,81,990. The difference is 15,000. So 15,000 we will record as a deduct from the adjustments. So let's go and deduct that amount. Change in working capital. Just one moment. I will drag the sum. Increase in creditors minus there is increase in creditors 44,047 because the question says it is 3,80,000, 3,81,990 minus 3,37,920 is what? 44,070, which we have taken care of here, 44,720. So this is what a total of 55,770 plus minus 9,300 plus these three all items will be recorded. The total comes, we will arrive change cash generated from the cash generated from the operation is total I have to do. So let's do the total. 1,01,400. And there is a one adjustment. Let's go to the question and see. Income tax paid during the year is 15,000. That will be deducted from the total cash. So let's minus that, less that income tax paid 15,000. So we will reach to 1,01,400 minus 15,000 is what the net cash from operational activity. There is a plus balance 86,400. So we learned for getting the cash from operational activity, we have to calculate one net profit first, arrive the net profit, add back those the allocation of profit for the general reserve or any other allocation is carried out, add back those, then find out non-operational and non-cash items took place during the particular period, then adjust the change in working capital, find out if there any actual tax paid during the year, deduct that from the total cash operated generated from operational activity, and you will get the next either cash used or cash generated from operational activity. Here in this case the net cash is generated from the operational activity is 86,400. So we have finished first activity, operational activity. Let's prepare the second, analyze the second activity, that is investment activity, where we will be able to understand is fund generated or used for investment activity. And for that purpose, we have learned where to look at. We have to look at the balance sheet asset side. So just give me one moment. We will go to the question. We will go to the question and check what are the items available there. And for that purpose, let me go to the question. Yes, question. Yes, asset, we have a land, 2,10,000. Now it becomes 2,70,000. It means 60,000 cash is utilized for investing in land. But building, it is depreciated. There is no further item. Only two assets are given. Land is purchased. So there is a 60,000 cash outflow from the investment activity. So let's record that in our cash flow statement. The second item is cash flow from investment activity. Just now we have seen that there was a land of 2,10,000 become 2,70,000. It means the purchase of land took place, and it's a 60,000. So 60,000, we will, there is no further item. That's the outer column. We will have to take it. Net cash used in investment activity, 60,000. We have done the, let's take a look one more time. In the question, have we forgotten anything? Land and building, stock, data, all are other current assets. Okay, assets are over. So that's all 60,000. Now we have to evaluate financing activity. And for that purpose, we have to look at the liability side, capital. There's equity capital, preference capital. And we learned the adjustment number 2 says that the preference shares were redeemed. And that was 90 becomes 60, 30,000 along with premium 3,000. So the investment, not investment, financing activities, funds inflow, outflow, we will be calculating. Let's go to the answer. Let's write third activity, cash flow from financing activity. We have learned that there was a redemption of preference shares. How much? 30,000. Let's confirm it. It was 90 becomes 30, sorry, 60 means 30,000 redemption. So we will say redemption of preference shares 90 minus 60 is 30,000 paid out, outflow minus, along with premium. 10% premium on 30,000 is 3,000. So let's premium on redemption of preference shares 3,000 also gone out. Whenever cash goes out, we deduct it from the cash pool. Therefore, 30,000 goes out, 3,000 as a part of premium. Let's find out further transactions. Is there any in a question? So we taken care of equity share. There is no change as it is. So there is neither inflow nor outflow. But preference share capital, there is a redemption took place with premium, that is outflow. General reserve already taken care of. Profit and loss account, that's for operational activity. Provision for tax for operational activity. Creditors for operational activity. Change in working capital taken care of. Now adjustment, the company paid interim dividend 5% on equity shares. That's a financing activity. So 1,20,000, 5% is how much? 1,20,000, 5% is 6,000 interim dividend, 6,000. So let's record that. Interim dividend paid 6,000. 1,20,000, 5% interim dividend paid. By looking at the question, we have taken care of all the items. There is no further, even we had considered the adjustments. So that's all for financing activity. Let's take outer column 30 plus 3 plus 39,000 outflow. So net cash used in the financing activity is 39,000. So I told in the format itself. So let's check that format. It told that cash from operational activity plus cash from investment activity plus cash from financing activity, we will reach to either cash generated or cash used from the activity. So let us find out what's there. The first operational activity, there were 86,400 cash generated. For investment activity, it was cash used 60,000. And for financing activity, it is used. So let's find out how much it is. Let me check. 86,400 minus 60,000 minus 39,000. It becomes 12,900 minus. That is called as net decrease in cash. Net decrease in cash and cash equivalent, that is 1 plus 2 plus 3 is 12,600. That's what the, considering all activity, operational, from operational activity, the funds are flown in. But in the investment activity, funds are used. For financing activity, those funds are used. Now, how much it is? 12,600 funds are decreased from the opening balance. So therefore, the fifth item which will be charged, the cash and cash equivalent at the beginning. How much? Let's find out in the question. Cash and bank balance, we have only bank balance. Opening was 15,840. So let's record 15,840. 15,840. So 12,600, 15,840 minus 12,600, 15,840 minus 12,600, it becomes 3,240. Let's check out the closing balance should be 3,240. Yes, it is. So we will record the cash and cash equivalent at the end of the year is 3,240. This is what a way we have to present our cash flow statement along with our financial statement. And the main intention behind it, that those stakeholders, either investors or the suppliers, wants to invest into the company. If they want to find out the liquidity, or if they want to find out the investing in that particular company, is it worthful or not? It all depends. Before taking a decision, they should not be misguided, because the term called as a window dressing is possible for a balance sheet. Henceforth, it is made mandatory to present your cash flow statements, what way the cash flown in, received by that organization, and what sources where the cash has been paid by that organization is to be given in detail in the form of cash flow statements. I hope I tried my level best to give you the 100, what I know a little bit about the cash flow statement. So once again, I take this opportunity to thank the principal of the college, Dr. Sonali Pennikat Madam, the head of the department of accountancy, Dr. Nikhil Karkhanish, and the faculty members of accountancy department for giving me an opportunity to share my thoughts on basics of cash flow statements. Thank you all for patience listening. Thank you, everyone. If you have any queries or doubts or difficulty, you can share. Over to you, sir. Felix, sir.
Yes, sir.
Thank you.
Yes, sir. Wait.
Is there any queries?
Students, please ask any doubts regarding the topic cash flow statements. Okay. No doubts.
No problem, sir.
So, Nikhil, sir, can we conclude the session? Okay. Before, I'll give a vote of thanks. Good morning, one and all. It's my privilege to propose a vote of thanks. Myself, Felix Anthony, on behalf of Department of Accountancy, Mulund College of Commerce, Autonomous, I extend a very heartily vote of thanks to the today's speaker, Dr. Sunil Kadam sir, for delivering a wonderful
So you are not audible.
Felix sir, you are not audible.
म्यूट पे चले गए. Sir, very well explained session. I liked especially how you covered in the earlier session why cash flow is important and how it is connected to not only business processes and accounting processes. So that aspect was very helpful in understanding concept, because solving cash flow statement is a technical aspect, but for general public as well, it is important for everybody to understand why cash flow statement is needed. And I think that earlier part of the explanation will be useful for general public as well. So I think that is very well explained and beautifully covered also through PowerPoint with all the graphics and all that.
Thank
So
you, sir.
I think that was very wonderful learning experience.
Thank you, sir. Thank you very much.
The entire session will be available on YouTube. Sir can also share it with his students. We will also share again
Sure,
the
sir.
entire series with our students, and this will be like permanent source of knowledge for our students.
Yeah,
So
yes, sir.
it will also
Absolutely.
be a good way for us to always remember how amazing this session was.
Thank you, sir.
So Felix sir is joined again.
Yes, sir.
Yes, if there is nothing, we can proceed towards formal vote of thanks.
Yes, sir.
Yes, great, excellent. With Kadam sir's permission, we can move ahead.
Sure.
Good morning, one and all. It's my privilege to propose a vote of thanks. Myself, Felix Anthony, on behalf of Department of Accountancy, Mulund College of Commerce, Autonomous, I extend a very hearty vote of thanks to the today's speaker, Dr. Sunil Kadam sir, for delivering a wonderful lecture on AS3 cash flow statements. Sir, we have no words to offer a gratitude for your valuable presence here. Sir, you gave a deep insight into the cash flow statements, and I'm very much sure it will help our students in their studies. I would like to thank our principal, Dr. Sonali Pennekar ma'am, and Vice Principal, Dr. Shivaji Pawar sir, for the constant support to the Department of Accountancy. I would also like to thank our Head of the Department of Accountancy, Mr. Nikhil Karkani sir, a great mentor and always guiding us towards the excellence. I'm also thanks to all the faculties in our Department of Accountancy. I would also like to thank Dr. Hiren Dhan sir and other IT staff for their contribution in arranging the online lecture. Finally, I would like to express a special thanks to all the students who sincerely attended the today's online lecture. Once again, my sincere thanks to everyone. Have a nice day.
Thank you, Felix sir.
Thank you, sir.
Thank you, Kadam sir, for sparing your valuable time. I'm sure very soon we can have similar sessions with you, and hopefully we can have at least one session when you will be visiting our college very soon.
Sure, sir.
And I'm sure this will be very helpful for our students for their in their studies and understanding concept.
Sure.
With permission of Kadam sir, we will close today's session.
Sure, sir. Thank you once again, sir, for
Thank you, sir.
inviting.
Thank you, sir.